What is up, everyone? We are TDR Trade of Black podcast here on the Gonzaga Television Network. I am your host, Shad Dales. We are in the world's largest cannabis dispensary here today, MJBizCon, Planet 13 dispensary. What a week it's been so far. A lot of stuff that we're hearing right now. We welcome in, what a crew we got here today. Anthony Coniglio, NewLake Capital. Good to see you, sir. How's things?
Things are great. Good
to
energized.
See you. I know. Rob Sechrist from Pelorus. Good to see you. How are things?
Okay, my man.
Good to see you. Tyler Burline.
Good to see you.
At dinner last night at Mastros. Good to see you.
Yeah, you as well.
Anthony Varrell.
It's good as always.
Good day,
it's good
sir.
To see everybody.
Yeah. So I guess we'll start with you, Anthony. What do you think of the What do you think of the conference so far?
It's good. It's good. It's good to see everybody. It's always great to get together with folks once again. I find that it's a little less attended than it was in previous years. I mean, we all know we're going through a bit of a difficult time, so I'm happy to see that from a budget perspective. But I think there's a lot of really good conversations happening, and we're excited to be here.
Yeah, you guys both agree with that, Rob, Tyler. You seeing less people here this year's conference?
Yeah, definitely less people. I haven't even been able to walk the floor yet. I've just been in meetings at the hotel. So I was there for just a few minutes.
No. The way that I know the belts are tight is everybody that I've spoke to in past years, like, so where's your event this year? They're like, yeah, we're not having one. It's like, it's probably a net positive. Save the cash, tighten the belt, and let's get 280 and everything done, and then start the party again.
What's that say, I guess? Tyler, what do you think?
I think we've seen a shift really over the last 3 years of everyone's here.
Yeah.
But they're not necessarily on the floor.
Yeah.
And I've been fortunate to be a part of the board for MJBiz, and that's been a big topic for us. It's like, how do we get people back to the floor? So it's a battle, and obviously with things being tough in the industry, it's a challenge.
I remember you told me, I don't know, a year or 2 years ago, you're at the first MJBizCon. You guys all sat close to the exit doors just in case the police came in. So
literally the only topic anyone could talk about, it wasn't cannabis, is, okay, if the feds come in, where are we running? Everybody had their exit path plotted out. And so to see how far it's come over the years has been pretty.
What year's that? You remember?
Gosh, man, I think it might have been 2013, 2014.
So 10 years.
Yeah.
Now you get, what, 250,000 people down here for a week?
Yeah, I want to say I heard a couple of years ago that MJBiz was the second or third largest convention that Vegas had during the course of the year.
Wow.
It's come so far.
I mean, it was big. And I mean, talking about fiscal responsibility, I mean, we just got out of earnings season. What did you guys think of earnings season? I mean, I've heard mixed feelings from some. My personal opinion was it was pretty positive. What do you guys think?
I think it's all trending the right way, and I think that it's good that the companies are more focused on profitability than expansion. I think that when you're driving for market share and not focused on profitability, that you've only got so long you can go on trying to maximize that before that catches up with you. And I think that some companies overran looking to garner market share that they had to give up, and now in trying to focus on profit share.
I also think it's a demonstration of the maturation of the industry.
Yeah.
People have generated discipline, or not generated, but they've created discipline for themselves and their businesses. And it ties into what we were just talking about here, Anthony, which is there's not the parties. There's not the teams aren't as big. People aren't sending 10, 15 people here. There's that fiscal discipline. And when you look at the SG&A that's going, or more the G&A of each of the MSOs, by and large down meaningfully quarter over quarter, which is that belt tightening that we're talking about. So it's good to see, and that retrenchment, that fiscal discipline is important for the industry.
And I would say that maturation is the key word, because each of these states is going through a maturation to a fully stabilized market. And that's something that we're very carefully watching, and where that's going to shake out. And no state has made it to a fully stabilized market yet. And that landscape is continuing to evolve. Even when you think that you're the leading player in a particular state, technology is moving and market shares are moving around still. And it's just, we're watching all that happen in real time.
The real companies are coming to the forefront, right?
Look, that is the headline that you get out there, but there are small companies that are so lean and mean that are crushing it relative to some of our other borrowers in the books that are doing enormously well, that everybody thinks that there's no way somebody could possibly do better than that, but they're not carrying the debt loads. They're not carrying the all of the learning curve that it took to get there.
Yeah.
They were operating very small and scaled very small, just profitability, didn't focus on growth, and they didn't have the capital to do that, but they own the business themselves. So those guys, there's guys in our books that are outperforming so much that we had to go and do an inspection and find out what specifically is going on here.
Yeah.
And then we've brought that information back, implemented in underwriting, and then also anonymize that and give it back to our existing book.
That's what I'm referring to. There's a lot of smaller companies. You and I actually touched about this yesterday, right? Where it's just like there are a lot of companies that are unknowns, but are actually doing as like an incredible job at business. And this is the growth of the industry. But you touched on that.
And if you look at how the industry's kind of matured, right? If you go back to the 2014 to 2016 range, a lot of the MSOs succeeded because they were the first in a limited license market. That was key. They built their fundamentals there. They learned that they had an advantage going into other limited license markets that were key. And so you had this land grab that occurred. And now we're seeing a lot of those companies exit strategic markets. And you're seeing like this guerrilla warfare type of mentality. And ironically, if you look at those smaller companies that are just crushing it and expanding in a really strategic, meaningful way, a lot of those guys have convenience store background, or they have background in retail and mainstream industry, and they live lean and mean, and they understand it. And so you've got the MSOs kind of consolidating and trying to get into a profit specific area, and then you've got these guerrilla warfare groups that have just expanded like crazy, and they're doing great.
I mean, the three of you guys are obviously entrenched in the sector from a lending and from a banking perspective. How does it play into your underwriting process, public versus private? Like, does it matter? Is it something you take into account, or like, how do you look at that? Because I've actually never thought about that from an operator perspective.
Yeah, I think for us at NewLake, it certainly does. I think that there's a level of discipline that a company has when they're a public company. It doesn't mean the private ones are bad, but it is a part of the underwriting process to understand what's the level of financial discipline and reporting discipline that a company has. And many of the public companies do have it. Some of them not as well as even the private companies do. Also, for those that have debt, right? Public company debt is a little different than if you have one lender loaning to a single state operator. And so there's that element as well. It's not an absolute good or bad, but it is part of the analysis.
I'd say it's definitely part of the analysis for sure. But I think that public companies are driven by different macro theses than a small private company. A public company is having to drive for growth in revenue, growth in profitability, and short-term gains every single quarter, as opposed to a private company, especially a closely held with very few investors, family held, that are purely making the best strategic decisions for the long term of that market. And that is a completely different outlook than a publicly traded company. They might be trying to plan for the future, but they have to be hitting performance metrics for each quarter.
On the backside, keying more in on that, on the backside of what we're looking at, Schedule 3, safe banking, do you see massive consolidation happening where these public companies do scoop up these private operators? Do you think there's going to be enough meat on the bone and space for the private operators to continue to excel in their respective markets?
I'm happy to take that one first. I think that when that's Schedule 3, if it occurs next year, I think that everybody's mindset is that their valuations are going to improve and nobody's going to want to sell. Because anything that's going to happen would be happening right now, or could have already happened. Even if the values haven't changed, in their mind they have, or they're going to. And so that premium is starting to be built in, and they're like, look, we've made it this far, we're going to hang on. So I don't see a significant shift, just in my initial thought of it, of a bunch of roll-ups happening just because of that. I think that everybody still will be focused on profitability, and I don't think we're going to see the full effects of rescheduling, even if it is passed or is it is approved next year. We still don't know if they're going to include 2024 as the year that it's retroactive for the taxes, or if it'll be implemented in 2025. We don't know that yet, and so I think that it'll be some time before, even if it is tax effective in 2024. I don't think that the capital markets and everything will really start to figure things out until 2025, 2026, because it's got to, they got to get comfortable with the sector. There's been so much stigma around it that they're like, okay, we got to come and start looking at this. And I just don't think that, I think that there's been so much retail capital burnt up in the space, and the institutional investors saw all that happen, and they've also seen all the mistakes that were made in Canada, and some of those same mistakes repeated here. That they don't need to rush in. You don't need to be hit bottom tick that investment. I'd rather get that investment when I think it's on a solid track moving up.
So let's tackle the elephant in the room. I think we all agree Rescheduling, yes, no. Does it happen in 2024?
Probably does. Yeah,
More
I'd
so-
have to put my money on it.
More so than in 2023.
A lot of people
Going out on a limb
It's
there,
coming
Rob.
down Monday. And I'm like, based off of
I'm
what?
willing to say not in 2023 and not in Q4 2024.
Yeah.
Yeah.
A safe assumption.
Yeah.
So, okay, they make the announcement. You and I have talked a lot about what people need to do as far as investors in this space and managing expectations. That announcement comes. We see probably euphoria of stocks rip for a couple of weeks. But once that starts to subside and settle, what should people be aware of if they're looking and interested within this space? Because your background, being in banking, some of the hurdles that we like, as Rob was indicating, and how we need to digest this over the course of 18 to 24 months. Like, how does this play out once the original announcement is made?
Depends on what it is. So if we're talking about rescheduling, that's something different, right? And if that happens, I think one of the things that people haven't yet grasped is if 280E goes away, yeah, there's a massive profit increase for everybody, and that's great. But what it also does is it enables financial institutions like us or lenders to underwrite differently, right? Because with 280E is a hurdle, institutions are less likely, there's a smaller group of capped borrowers that we're going to lend to, right? If 280E goes away, that opens up massively and capital should get a lot cheaper. So that's a huge benefit. Safer, that's a different animal.
I would say it's slightly different. Those are all true, but I think that the universe of capital expands bigger.
Correct.
And the universe being bigger will then drive the pricing down for what our structured capital and the financial products that we're working on, and thus that we're finally able to pass that through to the borrower.
Are you seeing any large institutional players kind of come, not come like want to come forward to deploy capital, but be like, guys, you've got your finger on the pulse of where this is going. What should I be looking at?
In our structured products that we did in our bond and our securitization, there was some bigger banks that you would recognize the names of, but there's no big guys yet. Now we have had intermittent talks with some of the biggest players out there. They just aren't ready to come into the space yet. And
what do they say?
We will never get the direct answer. It's usually, some of the biggest ones, some of them are starting with B's, and they are just, they're not in a hurry to come into the space. And I think that all the stocks ripping, if rescheduling is announced, is all retail that would do that. And I think that in reality, this sector doesn't become legitimate until institutional capital is here with consistent velocity. And until you have those trades of millions of shares a day to stabilize that stock, and that's going to be a while out. And so that retail ripping of the stocks is still going to be ups and downs on a general trend up over time. And so I just caution people that you're still in that retail world. And I've always been saying, until we get that institutional capital that's solidifying the base in here, which is, I don't know what the percentage is of relative of institutional to retail, but
97%
like 90,
retail.
Most is retail.
But what is the normal market? 90 to 10 or 95 to 5?
Probably 80% or so institutional.
Yeah.
would be
So
my guess in a
until those
normalized world.
ratios come that way, this industry isn't stable. It's not matured from the financial side. So we've always been talking about the maturation of the cannabis sector from the operator standpoint, but we haven't talked about it on the institutional investor on the capital standpoint, and that's got to mature too.
Talking about the maturation, Tyler, your background, payment processing, the banking that you guys are doing with Safe Harbor, we've seen a drawdown in debit card activity in the sector across the board. And I think there's a lot of misconception out there with S3 and Safer. What is the inflection point to where you start to see debit transactions come back and a loosening up, and credit cards actually come into the space?
I know nobody wants to hear this, but it's federal legality.
Yeah.
And the networks have been very specific about that. So if you look at Safer, it was interesting. MJBiz did a poll to the member base a couple of years ago, and they asked the question, what are you most excited about as Safe passes? And I think 80% of the responses were, we can't wait to use credit cards.
Correct.
And I had just literally talked to the networks the week before, and they're saying behind the scenes, it's not going to happen. Right?
Why do they say it? Like, give us reasons why.
Well, so they are prohibited from participating in any federally illegal industry.
Right.
And Safe doesn't change the federal legal status of the product.
Mm-hmm.
So from their standpoint, it's the same as any other prohibited item, which, take your pick of nefarious industries that they don't want to be a part of. So to them, it's the same.
Right. They're not banks, right? So when you think about Safe,
Correct.
Safe provides a safe harbor for banks.
Yeah.
These are technology companies
Correct.
that allow transactions to occur over their rails. And so they don't have that protection that everybody thinks they have. Now, if Safer was amended to provide a safe harbor specifically for the exchange and for those networks, maybe that would be a different story. But as it sits today, they don't have that. Right?
Yeah,
Correct.
I know we saw Elizabeth Warren, I think 2 weeks ago, draft some sort of legislation around FinCEN and like AML, which is another thing that a lot of retail investors and participants in the sector don't understand. Could that alleviate credit cards to an extent?
But it's coming from the wrong place.
I
It- that-
get that.
her writing a letter doesn't do crap.
Yeah.
Maybe
all of that is really not going to be effective, because when you think about the revenue opportunity for a MasterCard, a Visa, a
Yeah.
Discover, or even any of the big banks, you think of the revenue opportunity in cannabis relative to their total P&L, it's really small.
Yeah.
And so why will you take compliance risk
Yeah.
in pursuing this? You'll just say it's not worth it, because when you're a large organization, having been in banking for most of my career,
Yeah.
when you're a large organization, the regulators look at you as the opportunity to make an example of you. And so the fine in many cases could be greater than the revenue opportunity. So it's better for them to just say, I'm on the sidelines until I get the explicit approval.
You spent 30 years at JP Morgan. Going back to
15 at JP.
15, sorry.
It felt like 30.
dog years.
What's been the feedback? Kind of like what they were talking about, the ratio from like retail to investor, and some of the conversations that you had if there is rescheduling. Like, do you have conversations right now with some of the feedback that you hear?
Yeah, we're trying to engage with more and more institutional investors, because what I think could happen with the rescheduling, it could put us into what I call a positive feedback loop. I think you could get the ripping, as you've been talking about, on the stocks. And hopefully, and I would expect that MSOs, like a cannabis that I think did a good job in issuing equity, hopefully we start to recapitalize the balance sheet. So you get equity prices to go up, you get issuance of stock, use some of that to pay down debt. That initial QAD will bring in a smaller but expanded circle of institutional investors. Once you repay some of the debt, you improve the cash flow profile of the business, you improve the balance sheet. That's going to get incrementally more institutional investors interested, send stocks hopefully higher, which allows them to issue more stock, recapitalize the balance sheet, and keep this positive momentum going. That's, to me, the best chance to get institutions involved.
So
over
we
the next year
saw,
or two.
we saw
Hold on a
the
second.
the
Were you
refi.
going to say something?
Yeah, I was just gonna say where we've seen, I wouldn't necessarily call it institutional capital, but where we've seen where the people are on the sidelines right now are massive asset managers that do these types of structured products, and they once they start doing the structured products, then I think that would open up the equity investments for them as well.
Makes sense.
So those are the guys that were on the sidelines that were all kicking the tires when we were doing our transactions.
You wanted to add something. I noticed when I brought that up with Anthony, we're talking about just with safe banking.
Well, there are a few things. I mean, on the payment side, one of the things that people don't realize is with all of these other patchwork, whether it be cashless ATMs or the two banks that decided to take the chance with Debit, that's creating issues for the networks outside of this as well, right? And that's taking a lot of their time, and they don't want to be viewed as the bad guy either, right? So there is a lot of motivation behind the scenes to get into it.
Yeah.
They just need the right catalyst to do it. And unfortunately for them, it's checking a box, and that's federal legality.
Do we see that day?
We do. I think all of us would agree. We wouldn't be in the business, I think, if we didn't.
Probably
Question is
8
when.
to 10 years down the road, federal legalization.
You think 8 to 10 years?
Full federal legalization? Sure, unless there's a Hail Mary executive order by whoever the next administration is.
I don't think that we're going to get a full federal legalization. I think that we just end the prohibition, and that's not the same as federal legalization because it's always going to, it's the horses are too far out of the barn for it to do that landscape at this point. It's going to fall back to states' rights for that sector of the business. Now, one thing that we haven't talked about yet is the DEA federal license expansion that Eric Berlin was sharing the other day, that federal license system, which is a federal system for research, that they call manufacturing, which is not manufacturing in our world, but manufacturing is cultivation, and the DEA, that they're expanding the manufacturing, and that universe of sales is already fixed for each year. They whatever there is going to be purchased is purchased and it's produced next year. They expanded it. They've given instructions to expand that capacity, which we're trying. Eric and I met for an hour yesterday. We're scratching our heads. What are they thinking? What?
But isn't that more for research?
It is, but
Right?
that's what I'm trying to say.
Right.
We're scratching our heads, and we have no fact pattern for this whatsoever. But we're thinking, if you know what the known universe is of research, how can you expand that? Where is that excess product going to go? One part that's been shared with me from one of our borrowers that does have a DEA license is that Department of Homeland Security can already accept product from that federal system, even though it's supposed to be for research. They have the ability to accept product. Now, they're not. Nothing has happened that we know of right this second. But I'm starting to think, well, and this particular general is the CEO of that company. He's trying to get the Department of Veterans Affairs to be approved. Maybe that's the market. And so, again, no fact pattern whatsoever. Yeah. We're just trying to think, why would the DEA expand their own system if it's a fixed universe?
If you look at some of the stuff happening in Washington around research and approval for veterans' access to cannabis, there are a few things our elected officials agree on in Washington, but usually it's around stuff for veterans. Yeah. And so you've seen some bipartisan support. So it could actually be getting ready to support research around veterans' access. And there was recently a bill that was approved that's now in conference.
So that would be really great and meaningful if we could, for me personally, one of the things that why I entered the industry is that, we have this massive opiate crisis, over 80,000 people dying a year from it. And, some portion of the population doesn't need to use opiates. They could use cannabis as an alternative. And I think that that's a massive win that I think anybody in the country, even if you have stigma against cannabis, I think that you could get over that stigma if you realize that we're actually replacing opiates with this.
Yeah.
Do you not see those DEA licenses as being potentially predatory though to the MSOs? Especially
it's a different
DEA
it's a different universe. It's a different universe. You cannot, the DEA licenses cannot sell. In fact, you can't even have a building in the same, and if it's in Desert Hot Spring, we have the green zone that we've all been to. Yeah. The DEA facility is not in the green zone, and it has to be completely separate. Entities and everything have to be distinctly separate. If you have any cross contamination between that from entities or anything, you can't have the license. So it's a totally different universe. So I don't see that.
Okay.
How many licenses have been distributed for DE licenses across the country?
There's 7 of the cultivation. I don't have it off the top of my head, but it's like 1,500 or for the research ones, there's lots and lots of them. And I think that they'll expand that, but I believe that they might expand the cultivation, and that kind of sucks because, our borrower was one of the 7 of ones for the country. And that's a very extremely, valuable license.
Yeah, of course. What do you guys think? What's the plans for the rest of the week? Got anything in store for tonight? What do you think?
There's no parties to go to because we already said. More meetings. Why we come to these is to stay connected with the industry, to meet with analysts. Our focus for NewLake is really all about investors. This isn't necessarily an investor conference. So here with connecting with tenants, potential tenants, continuing that network within the industry. And spending time with analysts, and we're going to do that over the next couple of days.
And the same here, just back-to-back meetings with industry people, borrowers, potential borrowers, and just you can't collect any more market intelligence in a more efficient manner than being at this conference or Benzinga or something like that.
You got lots on the go too, huh?
Ton of meetings, a few events, and I tell people all the time, especially new people, if you're in this industry, just come with your eyes and ears open, because there's information that may not make sense at the moment, but 3 years down the road, you may run into a roadblock, and a conversation that you were a part of or overheard
comes to light.
Yeah. And that's happened to me, hundreds of times in the last 10 years. So it's always, I try and get around as many people as I can, try to understand each state market and who the dominant players are, and just get a feel for what's going on in each market, because that directly translates to what we're doing.
And you might be surprised where you get that information from.
Yes.
Yeah. And it might be somebody that you think has no business. They might be a service provider that is nothing that you would even deal with, but they might have a choke point of information that's going through that actually pertains to understanding a market or how things are working in a better way. And that's you just never know when you're going to stumble across that, and you got to be open to accepting that from wherever it's coming.
Yeah. Last thing I wanted to touch on, you and I talked about uplisting onto like New York Stock, NASDAQ, Safe Harbor, trades on NASDAQ, correct?
Correct. Yes.
So, like, will it take rescheduling, or is it going to take Safe to happen for some of these companies to uplist on some of the other major exchanges?
I think the thought among the MSOs is that Safe will do it. Whether or not that happens is yet to be determined, right?
Yeah.
Whether or not it passes one, to whether or not that is the final result. I think those things still remain unclear, to be candid.
Yeah.
I think rescheduling could have an impact.
So, we go to FinTech TV quite often,
Right.
And Vince is very connected there. And he's like, Rob, they're leaning in to getting ready for anything that happens. New York Stock Exchange wants to embrace this. And that's why they're letting us build out our platform. And that's why we are able to do so many interviews there.
Oh, that's interesting.
Yeah. So they acknowledge they can't do it yet, but they're ready to embrace it. And I think that's really massive. Why the NASDAQ wouldn't let us go and do our studio with them, that one we still can't figure out.
I'll take the other side. We're public. We're traded on the OTC, and we engage in this dialogue. Go back to the issue that we were talking about before with Safe. I think these big organizations need clarity, and I think Safer, as currently drafted, doesn't provide them the explicit safe harbor that they're going to look for. Now, maybe Safer gets amended and that language gets in there. I know there's a tremendous amount of lobbying for that to happen, but absent explicit safe harbor for the exchanges, don't see it happening. I don't even think 280E makes it happen because, Schedule 3. People have to remember Schedule 3 doesn't make it legal.
Correct.
It continues to be illegal. And yes, you can go and get registered with the FDA as a Schedule 3, somebody that could operate and manufacture in Schedule 3 product. Most of the MSOs in this industry most of the companies, forget MSOs, most of the companies in this industry either can't qualify or don't want to go through the money and the time it'll take to qualify. So I don't think a rescheduling impacts that decision. I think it's going to take something that's more explicit for them, or a change in risk tolerance for the exchanges.
Yeah.
How is Safe Harbor able to list on the NASDAQ?
So technically, we are not a financial institution at this point, where I would classify a reg tech. So we own the relationship with a merchant. We use the balance sheet of other institutions to hold those funds, and then we lend off of those balance sheets.
Gotcha.
Yeah.
So doing a lot of work in this space and the relationship you've built with them, are they, like Rob said, New York Stock Exchange may look at it one way and NASDAQ another. What's been, I guess, your experience when dealing with them? And are they opening up and being more acceptive, or at least listening?
Well, so it's interesting. There's a case of an institution that's lent directly to the industry that's filed for an IPO. And I'm very curious to see how that plays out, because it's always been our understanding, and it's proven to be the case over the years. If you're directly banking or you're directly lending to the industry, you're not going to uplist to one of the exchanges. So I think that process right now, it's happening in real time. That's fascinating to me, because I don't see how NASDAQ approves that, knowing what I know about what we had to go through to list on
You think there's
NASDAQ.
a chance?
But hold on, there are lenders that are on NASDAQ.
Correct.
today.
But here's the difference. So I went through this with NASDAQ years ago with a previous company, and met with their counsel at an event. It was informal. And I asked the question, why couldn't we? Because at the time we were a tech company, we didn't touch money. We were just an infrastructure play. And they said, well, you're aiding and abetting transactions in a federally illegal industry. And I said, I wrote 8 names on a board, and I turned it to him, and he said, who are they? And I said, those are 8 banks that I've been in personally, watched the cannabis cash come through the door. They're publicly acknowledging their banking it, and they're uplisted on the exchanges. And the response was, we are not in the business of governing a listing after it's been listed, right? That was their out. And so, but you
have a couple of cannabis-only lenders out there that have gone public over the last couple of years.
But in exchange, they had to give up some
rights,
some rights that are pretty significant.
Assets.
Yeah. So is the financial institution trying to do that? I'm just curious to see how that plays out.
Speaking of financing, I mean, do you guys think that's a one-off, or do you think that that's going to be a trend that we see moving forward?
I don't have the information yet, but we were all discussing it last night. There's a major lender scheduled to go public next year, and there's no way that they're going to give up their ability to foreclose. I can't imagine that they would. So
I would imagine
I'll-
the regulators wouldn't let them.
yeah, I'll have that answer.
We can't disclose
but-
the name right now, too.
Yeah,
I won't
yeah.
say that.
Yeah, I'll
I'll plead
have
the fifth on
that
that one.
answer because I'm meeting. That's my next meeting, and that's one of the questions I just made a note to myself to remember to ask that.
So should we put this podcast on my phone and just follow you?
A
I'm sure
GoPro.
viewers would appreciate that.
Yeah.
All right, gents. Well, this has been great. Eric, really appreciate the time. You know, always a good time to get to Vegas. What a facility. 112,000 square feet. It's pretty incredible what
They did a
they've
nice job
built
with this
here as
place.
far as
They
the
did.
destination.
Yeah.
Have you gotten a chance to meet anybody here? Larry Scheffler, we just interviewed him, but good guy. He's got quite the consumption lounge that they're going to be opening up the next year or so.
This place
So
is
He's a visionary. He's
Isn't he?
been in it a long time. I remember when they opened up this place, and he embraced all of us as if we were equals to him. No ego, and he was very successful even at that time.
very down to
And
earth guy.
just the vision that he had for this place, he knew exactly. It's like I walked in here today, and I haven't been back since this was, mainly warehouse at the time, and it was only built out in the front. And what he explained is exactly what I see. Like it was like he described the rendering, and now we see it in real
It's
life.
insane. It's insane to see this thing grow from 2018 to now. I said it was almost like Willy Wonka and the Chocolate Factory. He just keeps adding on and adding on.
Oh,
and
he's so
adding on.
smart,
And
too.
it's an immersive experience.
Each
now.
individual
It's not
store
even a
has its own
dispensary.
PO box as well, so it's a different address, different
Oh.
locations. They don't want alcohol and cannabis on the same
Oh,
place. So
that
you
is
got to get
fun.
creative in
You,
this
you
industry,
also
right?
can't see a cab in this town without Planet 13 just
No,
plastered across
like,
it.
I said it. I was like, I was like, Larry, you're gonna have a taxi line in front of the
Yeah.
dispensary next to you.
I thought Planet 13 was a strip bar. They were offering me free rides.
Hey, they've got more expansion. You never know.
Yeah.
Yeah.
We might have to get Larry back on
Yeah.
and address that.
It'll just attach to Spearmint at one point in the parking lot.
Gents, I really appreciate you taking the time, but most important, let's keep in touch. Enjoy the rest of your trip to Vegas.
For sure. Thanks for
Thanks.
having us.
Thank you.
Take care.
Appreciate it.
Hey everyone, thanks for watching. And if you want to learn more about the emerging industries that we cover, then leave a comment below and let us know who you want us to interview, the questions you want asked, and the information that you want to learn. We want to hear from you. As usual, click on that bell for all notifications to get the latest information. Share this video with your network, and don't forget to subscribe to our channel.